Well, good morning, everyone. I'd like to thank you for being here. How is everyone?
We okay? Am I okay?
Uh-oh. How is everyone?
Good.
Good. Okay. Did you get some breakfast? If you did not, please go into the kitchen, grab you some croissant sandwiches. I'd like to introduce Ty Walker, the owner of. Step on up here, sir.
Oh, I'm sorry. I'm just trying to give you a trip over here.
Yeah, that's all right. This is Ty Walker, the owner of Wanda J's Restaurant in Broken Arrow. Great soul food, great fried chicken. I'm there every morning. It's a good place if you'd like to go and have good breakfast meetings and different things like that. But I want to thank Ty for supplying our breakfast and refreshments.
Where's it located? Yeah, where is it located in Broken?
Where you located? 1105 North Elm Place.
Okay.
Right down about a block and a half north of 71st and about a 3/4 of a mile south of the Bay Expressway.
You got a meeting room?
Yes, sir. Call about 20.
What's your phone number?
918-258-5588.
We'll be in touch.
Okay.
This meeting place wouldn't happen without the support of the Regis Group. And I'd like to introduce the general manager of the Regis offices here in Tulsa, Amy Anderson. Come on up here, please. Mr. Shadwin. Come on up. Open gate. Well, I appreciate being able to have this location, and tell us a little bit about the facility and what you guys do here for business owners and some of the opportunities, how it works.
All right, so we are a full service office space. We have reception areas, so we have 2 people that greet all your clients and offer them coffee and water, and then we have about 64 offices on the floor, and they're fully furnished offices, and we have IT and phone services as well.
Great.
And we also have just conference rooms or private offices that you can rent by the hour, by the day, depending on what your needs are.
All right. Thank you so much.
And I met you through Dorea's event.
Yes.
Let me sit on that corner.
Well, I appreciate, again, everyone being here. You could have chosen to do something else on a Saturday morning in Tulsa, Oklahoma, with rain forecast coming and all of this other stuff. But today, I'm very excited to be introducing some things. We've already introduced it to Tulsa a few months ago, but I'm an executive vice president with a company, a national company called My Econ, and I also own my own LLC called Smarter Money Now. My background is in the financial planning industry. I grew up right here in Tulsa, Oklahoma, and earlier this year I made a conscious decision to allow all financial licenses to expire without renewing them because I have a brand new purpose for why I want to help people in our community. And in helping people in our community, I want to connect with financial advisors and other people who sell financial products. But after you see what we're going to talk about today, we have a mission that I'm a part of, that we're educating and elevating the mindset of our community to be more financially aware and savvy of things that they're able to control on their own. Does that make sense? I mean, for so long, we've gone along and you just do everything that your grandparents have told you to do and your parents have told you to do, and what you might learn in school, a little bit in school about finance. But really, most people don't have a clue when it comes to really understanding money and how capitalism works. And so that's my mission, is to help people understand capitalism, what it means, how it affects them, and partner with other business owners in touching our community. So that's what we're going to be doing today. The agenda, I'm going to go through a business presentation. I'm going to share with you a tremendous opportunity. And then we're going to take a quick break. There's plenty of food. And then I'm going to get into some more intense training a little bit later in the afternoon, as you saw in the registration. We're going to be talking about W-4, Schedule Cs, and we're going to talk about it in a fun way, not in a boring way. Okay, numbers a lot of times is boring. Does that make sense? But we're going to talk about it in a fun way, in an application that most people have not really understood. Okay, so without any further ado, why do we each get up and go to work every single day in whatever business occupation we've chosen? Why do you do it?
To make money.
To make money.
Right.
Okay? There's two primary objectives, and if those of you that have your back to the television, you probably want to spin around because you're going to see what I'm talking about from here. If you can take some notes, that'll be great. But there's two main objectives. You have a lifestyle. Your lifestyle costs money. It has a designated amount each year that it takes to run your household. And with that lifestyle, you want to take certain vacations. You want to take your kids to a theme park or 2 or 3. You have a home, you have a car. All of that stuff takes funding. In order to pay for that, in your working years, you must pay for it through your labor or through your efforts or through your business of some sort. But at some point in time, you must decide or agree that, man, I'm hanging it up, right? I'm retiring. I'm not going to keep working for money. So what should pay for your lifestyle then? If you invested properly, your investments should take care of your lifestyle needs when you decide, I'm not working for money anymore. How's that happening, or how's that coming along for a lot of people today?
Not good.
How's it working out? When people are getting to retirement,
Not good.
well, we've had a couple of entities that have tried to create a solution for the American population. That's Social Security. We have pension programs.
Not at
Where
all.
are those today? Do we see very much of that? No, we don't see too much pension. What about 401ks? How are people doing with their 401ks when they're getting to retirement?
They've already spent it, majority of
A lot of times they have spent it. And I'll tell you why. We'll hit that in a second. But there's 4 obstacles that prevent most individuals from achieving objective number 2 in these 2 objectives. Number 1 obstacle today is inflation. How would you define inflation? What would you say inflation is?
ongoing. right now.
It is. It's ongoing.
Something that's inevitable.
The depreciation of the perception of currency.
Well, depreciation of the perception of currency, I like that answer, but
It's a reality.
it's the rising cost of goods and services.
Not worth it.
The $10 or the $100 bill is still a $100 bill. It just means it cannot buy what it bought 10 years ago, right?
Right.
Worth less.
I mean, think about this. When you go to the gas station today, and you give the attendant $10, or you put your credit card in and you buy $10 worth of gas, how much gas can you walk away with?
Maybe 2 gallons.
Maybe 2 gallons. But 10 years ago, how many gallons of fuel could you walk away,
Full of
drive
tank.
away with?
10.5.
Okay. That's inflation. It's the silent income killer. And oftentimes on jobs, individuals think that because they have made, their income has doubled. You know, 10 years ago, 15 years ago, I only made $20,000, now I'm making $40,000. In reality, you're still making what?
Maybe less.
Same $20,000.
Maybe less.
Okay. So because inflation is a huge factor, most people are making a mistake, and where they're investing their money, it's not outpacing inflation. If your money's not outpacing inflation, you're going what? Going broke or backwards. The second thing, most Americans lose up to 1/3 of their income to taxes. Now we want to make sure you understand that this meeting has nothing to do with tax evasion. I want to make sure that's clear. We're not going to give you strategies talking about how not to pay tax, how to get it, excuse me, out of paying taxes. No. We're going to be introducing things that the wealthy understand about taxes, that they do not pay a dime more than they should. Does that make sense? So because Americans lose 1/3 of their income to taxes, in essence, what that means is that you go to work for Uncle Sam, January, February, March, April, individuals that are W-4 employees, okay, because they take the money out of their paychecks before they get to spend it, you're working January through April, okay? And because you're working January through April, That leaves you with the other 2/3 of the year to try to enjoy or make or live off of it. But because taxes take so much, it creates debt. And so you have to borrow another third through credit cards, car loans, house notes, and other things like that. And think about this. When you go and finance your home, do they ask you what your net income is, or do they ask you what your gross income is? So our lifestyles are based on our gross incomes, not our take-home pay. So if taxes have taken a third, that's really money we're not accounting for. So because Americans are working, they lose another third to the banks. That means we're working from May, June, July, August for Uncle Sam. For the banks. We've already worked from January to April for Uncle Sam. Then challenge number 4, less than ideal cash flow decisions. This is one that affects people in so many ways. I was thinking about all the marketing that has gone into the fair and all of the unique foods that are at the fair this year. And so now people are in the restaurants or out to eat talking about, hey, if you're going to the fair, have you tried that new, which pizza they're talking about now? Cricket pizza? Okay.
Yeah. Yeah.
Now we have a restaurant owner here. How did that pass the health department goals?
Actually, crickets are very healthy.
Okay, all
So
right.
it's actual crickets.
Yeah, and they're the full body cricket.
Full body cricket.
Well, they just fit
You're gonna be John in the wilderness for real.
Military chiefs, they Army Rangers and, Navy SEALs and
Yeah.
people to
They used to eat that.
crickets and survive off crickets and they in prison.
So maybe they're trying to tell us something.
Yeah.
I don't know.
That's where we're going.
I guess so. Maybe that's where we're going. However, the reason I bring that up is because most Americans are affected by capitalism and corporate America, and we wind up working for them September through December. Here's why. Every month, let's see, this is September. So earlier this month, what holiday was everybody planning for and getting excited about? Labor Day. Now, coming up next month is what? Halloween. And can the kids use the same costume from last year?
Of course.
They got to go buy another. And then, November is what? Thanksgiving. There's going to be a run on turkeys. Okay?
Yeah, Black Friday.
Black Friday. Then there's going to be, in December, Christmas, and the credit cards are run up, and then New Year's, resolutions are made. God, if you help me do this, I will never do this again. February, Valentine's Day, March, St. Patrick's, April, Easter. Ain't been to church all year long, but gotta go with a new hat, new dress. Okay?
July 4th.
We got Mother's Day in between there.
Oh, yeah, Mother's Day.
Ain't thought about Mama all year long, and now, hey, Mama, you the best thing, But the capitalism of our system is set up to take as much money from your pocket as possible. So when we talk about less than ideal cash flow decisions, here are some other examples. How many people do you see run into the ATM machine at a Quick Trip or some other machine that may not be the bank of their banking? You know what I'm talking about, right? You're one of them. Okay, so you swipe your card. You want 20 bucks. And it costs you $2.50 at the machine and $2 at your bank. So you've paid 20% interest, 25% interest just to get your own money. That's called less than ideal cash flow decision. And how many people are doing that monthly, weekly? Okay? Late fees, overdraft fees. You get paid, see, we say in our business, the lack of money costs you money. See, if you get paid on the 5th and your bills are due on the 1st,
That's right.
and there's a late fee if it's not there on the 3rd, look at how much money is spent in just late fees. And if you add up the late fees over your working lifetime and put a factor in, interest factor of earnings, you have $250,000, $500,000 in just late fees
Yes.
into your savings account? Okay? We can go on and on and on with examples of less than ideal cash flow decisions. But what we want to talk about, which I should have prefaced, is when we talk about this meeting was called 3 Strategies to Skyrocket Your Financial Future. This is our 2-4-3 presentation. We talked about 2 objectives. We talked about 4 obstacles. But let's talk about 3 solutions. And the 3 solutions, it really gets me excited because I'm a part of a movement sweeping across the country called the Extra Digit Movement. The Extra Digit Movement is a movement that is teaching people how to become successful, not doing it through sales as traditional opportunities, but using strategy. The goal of the Extra Digit Movement, I'll just tell you this if you want to jot these down, starting back January 1st, in the next 5 years, we want to eliminate $1 billion of debt within our community. We want to create 100 new business millionaires through the second strategy I'm going to show you. And third is to create $1 billion of investable assets within our community across the country. And I'll show you how we're going to achieve those numbers. These aren't goals that are for tomorrow. These are 60-month goals starting earlier this year. Okay? The Extra Digit Movement was started by a gentleman named Brian Bean, great partner of mine. Some of you who are internet marketers may have followed Brian Bean, I understand, or heard of Brian. Brian retired at the age of 22 from corporate America, went into the networking industry, created a 7-figure income in his late 20s, but he did it through sales. Now he's a respected business development speaker, motivational speaker, and personal development coach. Okay? Why is that important? Because when we talk about sales versus strategy, we're going to show you the superiority of a strategy. Because how many people in this country, or even in this room, enjoy going out selling something? Okay, then get in your hands. Great. I don't like sales either. We all do it because if we're in business, you've got to market yourself. If something is not purchased, money is not transacted. Okay? But if we have a strategy, we can help families achieve financial success. Our 3 strategies use a system called income shifting. When we talk about income shifting, this is where most people in the United States are today. They're W-2 employed. The attitude of a W-2 person is this: I go to work, I give you permission through a W-4 form I filled out when I started for you to take taxes out of my check. You get to take taxes, send it to Uncle Sam, and I spend what's left over. I agree to that when I start working for you. That's the attitude of a W-4 or W-2 wage earner. The problem is, these individuals are the highest taxed in America. Because this is where they're losing upwards of 1/3 or more of their income, because taxes on labor is higher than taxes on money. So ultimately, when we talk about income shifting, we're simply helping individuals move their income strategies from here over to here. We do that by strategy number 2, by creating business income or home-based businesses. When you have a 1099, your taxes are less because you get to create more deductions. And I'll break that down for you. Ultimately, when you have investment income through capital gains, dividends, and so forth, they're taxed at least anywhere from 10 to 15% versus your income being taxed at 33%. Does that make sense? So Jessica, if you had the choice of making $100,000 going out working for it or having it through your investments? Which would you rather have that 100,000 generated? Through investments. That's income shifting. How do we accomplish that? Well, we have a system that we teach everyone at our company. We're partnered with a company called MyEcon, which stands for My Economy, based out of Atlanta, Georgia. We have a system that costs $179 and $29 a month. We teach you the strategy, we give you the software, we give you the system, and we help you along with the training of success. And that's what I'm going to be training after this meeting later on. $179 a month, 179 bucks one time and $29 a month. Why is this important? Well, let's go back and talk about strategy one. The tax refund. How many people do you know get real excited about their tax refunds? Isn't that something people live for? Come January, February, March, they're extremely excited to go file their taxes and get their tax refund. Why is that so important for families? They're getting some money. That's their savings plan. That's their forced savings plan. They're going to pay off some bills. They're going to put a down payment on a car. They're going to call up and negotiate with their bill collectors and finally get that sort of stuff. They're excited about that. This was on the IRS's website in 2005. This is a memo that they put out. And it talked about, where does your refund come from? Well, for the average person, they said the refund was about $2,100. This is in 2005. Now it's $3,100. Research of last year, the average refund in America. That means people are spending about $40 to $60 a week too much in taxes. Where does your refund come from? When you tell your employer how much to withhold from your paycheck, or you make an estimated tax payment. They're simply giving you back
Take it out.
the money you paid in. Okay? You might be using this extra withholding as a forced savings method, but Uncle Sam doesn't pay interest on refunds. So going back to that problem number 4, less than ideal cash flow decision, would you say overpaying your taxes is a less than ideal cash flow decision?
That's right. Definitely.
Absolutely. Because if you were a bank, welcome, how you doing? Good. If you were a bank, Ms. Caldwell, would you give away interest-free loans?
No.
Why not?
Not a good business decision.
Not a good business decision. Why do hundreds of millions of Americans give interest-free loans?
Don't know any better.
Okay? That's what they're doing each and every month, is giving away interest-free loans. So, what our strategy 1 does is we help people recapture that money that they're giving away each and every month. So I'm going to be doing a training this afternoon on the W-4 form. That is the form where most families' financial crisis starts. Starts with that form. Because that's the form you give your employer permission, or people you know who have jobs, because I think we have a lot of business owners in here. But the people that you know that have jobs, that's where they mess up. They give their employer permission to take more than what's necessary. Sometimes they even tell them, here, take a little extra so I can have a bigger refund. Have you heard people say that? Okay? So then, we help them reposition this W-4 money, and for the most part, we have individuals in our movement that are putting anywhere from $300 to $1,000 a month back into their paycheck. Now, why did I say earlier I gave up certain licenses and different things? Because when I can go on an educational campaign, I want to partner with financial people or people that are in business that help individuals get out of debt. We're going to help them find the money. See, a lot of financial advisors will go out and tell people, cut back on your eating out, cut back on cable. If you smoke, cut back on that. Well, I'm going to endorse that you stop that, but that's my personal choice. But they're going to go and look for money that's in the 10% loss category. Why not go look for money that's in the 33% category? So if we can help families recover money that was once going out to Uncle Sam, now we've got money toward debt elimination, which we're going to show you, well, right here. When we put this money back into their paycheck, here's this person here is showing an extra $450 coming back out of their paycheck, back into their home budget, okay? $450. Through our strategy 2, which is business income, they're putting an extra $1,200 a month into their budget. If we can teach that person how to go and get their cell phone for a little bit less, we're not endorsing any particular opportunity or business or cell phone company, but if you can go and reduce your insurance and your fixed cost, that's a wise thing to do. When you can start taking that money and eliminate your debt, and now you can start putting money toward assets, investments, you can increase your cash flow tremendously. Okay? Strategy number 1 is we're simply trying to help people overcome this problem of I work, I pay taxes, and then I spend, because that's the basic attitude. Strategy 2. When you create a home-based business of some sort, I don't care what it is, you then have the attitude that my business works, my business spends money, and then my business is taxed. That's a complete flip of the script than the employer mentality. Does that make sense? So now, let's look at an example. Before home business, if a person's income is $50,000, and these are just round numbers. We're not subtracting off all of your personal exemptions and all that. We're not trying to get that detailed in just this example. But overall, the tax on your gross, you're looking at about $18,000. Your net is going to be $32,000. Then by the time you pay your bills, you've got another $18,000 paid, and you live off of $14,000 a year. Would you say that's a typical family in the U.S. today? I mean, that looks pretty standard? Okay. When you have a home business of some sort, I put a post on Facebook the other day because I was headed out to the golf course. I like to write off my lifestyle. When you're starting to write off your lifestyle, here are some of the things that you get to do with the home business. Write off a percentage of your square footage. Most people know if you own a home, you get to write off your mortgage interest. Everyone gets that deduction. But why not start writing off a percentage of your mortgage payment, percentage of your rent payment, a percentage of your utility bills, your cell phone bill, your meals and entertainment, your travel, your mileage. You're going to spend money on all these things anyway, right? Mm-hmm. Why not get a tax benefit from it? By setting up some sort of home-based business. So you set up a home-based business, you start writing these things off, then let's look at this example here now. Same $50,000, pay your bills, net 32, taxed on the net, live off of 25,000. You saved $11,000 a year, $900 a month, or $225 a week, and all this person did was set up a home-based business. Does that make sense? Mm-hmm. So now, when that business starts to create income, you've adjusted your W-4, you've taught your friends, this is what this opportunity is about, is helping other people learn what they could do. They've adjusted their W-4, brought some of that cash that Uncle Sam was taking, put that cash to work, accelerating the payoff of their bills. They've set up a home business. Now you put those two incomes together, you really can pay off your bills. Now you start to write off things that you weren't writing off before. Now, what's not on this list that I always love to talk about, how many people in here have children, ages 6 to 18? 1, 2, 3. Did I see another hand? Okay. Are you aware that you can employ your children and put them on payroll in your home business? The personal exemption is $6,100 per person. So if you have more than 1 or 2 children, that's $6,100 per child that you can be writing off on your taxes by simply employing your children in your home business. That's a huge write-off.
Huge.
Because you're going to pay for your kids' schooling, their shoes, their backpacks, their football, their cheerleading, you're gonna pay for that stuff anyway. So guess who now can pay for that stuff out of their own account? And by the way, that doesn't mean that they just get that $6,100 and do what they want to do. Mom and dad still gets to control that money. Mama may still need to go get some groceries. Okay? So we don't want the kids getting it twisted that that's their money. Later on, I'm going to try to pull up the clip when I get into the other training, into this more detail. I did a Google Hangout with the CPA out of California. You might want to jot this gentleman's name down, Mark J. Kohler. He's a CPA and an attorney. He's an asset protection attorney out of Orange County. We did a Google Hangout, and he loves talking about home-based business deductions and then putting your children on payroll. And he explained in this Hangout how he employs his 4 children, writes off about $20,000+ a year, and what he does. So I'm going to try to play that clip a little bit later on if we have time. So this is what Strategy 2 is all about, is understanding to take your same expenses. See, a lot of people say, well, I ain't got time to be doing a home business. Well, you're already spending this money. Why don't you have time? You're on your way to work and you're stopping at Java Dave's or whatever coffee shop, getting coffee and stuff. Pass out a business card. Ask people, hey, do you employ your children? Give me a call. I'm going to show you how to write it off on your taxes. And keep on going and write those miles off. Don't go out and create a second job by setting up a home business. Blend it into your lifestyle. Write your lifestyle off. I enjoy playing golf. I enjoy doing different things. I go to the barbershop for the purpose to speak to all the gentlemen that are inside the barbershop about money and finance. I want to write off my haircuts. I went there to market. That was my purpose. You can't tell me I didn't do that for that purpose. So, when we talk about our opportunity with My Econ, this really gets exciting because how many people do you know would love to be able to put an extra $300 to $500, $600 a month back into their paycheck or their take-home pay? It's a simple no-brainer, yes. For $179, a person can partner up and be in business with us and take advantage of our system, take advantage of our training, take advantage of our software, which I'm going to show you that you get with this $179. You share this opportunity with a few people. The company's going to send you a couple of checks, about $25 a piece, on your first 3 people you share this with. That's nothing to really get all excited about as far as that goes. But that just gets you in the game, gets you trained. You get to work with an executive vice president and putting your financial plan together while you're simply sharing it with a couple of people. Where it gets really exciting is then once you now have become an executive vice president with our company, with a $5 retail qualification of a product, then you go out and share this opportunity with people because now you start what's called a base shop. When 7 people come into your base shop, whether you introduce this to them or they introduce or someone else introduces it, the company's going to pay you out a $1,000 bonus. For every 7 associates that joins your base shop after your first 3, so starting with your 4th person, they're going to send you a $50 check plus $25 for all the other people that they've introduced it to, plus $1,000, you earn $1,175, which is $167.50 per associate. Mondays are great days in our business because checks are cut on Thursday and they get to your mailbox by Monday. I love Mondays. And I love these here. These are very nice because it doesn't take a rocket scientist to help people to understand. Yes, sir.
Does it matter how they come into your business?
Into your base shop?
Into your base shop?
No, it does not. Because let's say here I am, here you are. You introduce this to me, the company's going to send you a $50 check, but then I go turn around and introduce it to Ty. And the company's going to send you a $25 check just for me introducing that to Ty, and that goes to you, okay? And so when 7 people join your base shop, they send you $1,000. Plus the other overrides. So that's where the $1,075 came into play.
So if I tell one person and that one person told 6 people, so to speak.
Absolutely. After you got to your base shop.
Okay.
After you got to your base shop.
That's 3. That's past 3.
Right. after your first 3,
That's the
on
fourth.
your 4th one, that starts your base shop. And I will be training more on the compensation later on in the training. But for $179, one of the things that you get inside of this software is a do-it-yourself credit repair system. That's worth $500-600 just by itself. When you have all the letters, all the information, and the process of how to go about cleaning up your credit, how many people do you know have had some credit challenges? Okay? Just that alone. So, along with this, well, this was a couple of weeks ago. These are some of the base shop bonuses that were some checks that were passed out, and I was privileged to be one of those. We were in an event in Atlanta, Georgia, called Game Changer, which is an event that Brian Bean puts on, again, for personal development and motivation, but yet helping you with business development. In order to really help you with taxes, we also have part of our software is a cash flow manager. Now, if you already have a home-based business, what we're doing with My Econ, and the reason why I think this is one of the best opportunities out there, is because our tools are needed by anyone in business. This mobile app feature here, this is a screenshot of what it looks like on your phone. If you have a smartphone, you're able to put in your income, enter your expenses, capture receipts, and log your miles right from your smartphone. This is one of the biggest headaches that business owners have, is tax record keeping. Keeping up with receipts. What do you think happens with their receipts throughout the year? Bag them up, then they got to sit down and go through them.
I just throw them away.
Well, here's a job for one of your children. Okay? You can employ your children as your bookkeeper. But you've already taken a picture of your receipt, and this is a web-based app. So this is not an app that's keeping all your receipts on your phone. It's a web-based app. Okay? You can track your commissions, track your earnings, track your expenses, set up reoccurring payments, so all that stuff is automatically accounted for. And then this is what it looks like on the actual computer. If you log onto your computer, you just hit your drop down. This is meals and entertainment. I spent this much money here. Who, what, where. That's all the IRS is looking for. So you don't need a real encumbersome software. And by the way, this cash flow manager software is a separate software you can purchase just by itself. The deluxe version of this is $17.95 a month, and the entry-level version of this is $9.95. Keep your mileage. If this is a reoccurring expense, set it up. So your cell phone, that's going to be reoccurring. Your insurance, that's going to be reoccurring. You don't have to go in and monthly set that up. Okay? What's nice about it is at the end of the year, you can pull a report, or anytime you can pull a report. And you pull this report, you can have it either uncategorized or categorized. So then it's going to put everything in a nice section. Meals and entertainment, we spent this. Travel, we spent this. Then you take this, print it or export it, and email it to your tax preparer. Your taxes are done for you. Isn't that simple and easy? Okay? Keeps the headache down. Because strategy number 2 with having home-based business income, you want to make sure you have your tools in place to make that simple. Part of that, again, we earn residual income as well. So from this $29.95, it pays out anywhere from $3 to $8 a month. We have a dollar infinity program, our cash flow manager, our retail products pay out income as well. We have an online mall. So if you like to shop online, we have a cashback rebate mall. I personally enjoy our cashback rebate mall because I go into Advanced Auto Parts. They have a 4% cashback rebate. I purchase what I want. I put in some of the codes, and the online prices are less expensive than going into the store. Then I go into the store because I say I want to pick it up, and it's sitting there waiting for me, and I go get it. And I go home and do what I need to do in my car. Home Depot, Lowe's. So if you know contractors, they could be shopping and buying their materials that they need for their online mall and getting cashback rebates, and then go to the store and pick it up. All right? So we have our Family Shield program. Family Shield is gives you 5 services for $13.95 a month. These are just some of the retail products inside of our My Econ system. And this is the online mall. We've got Walmart, Priceline. All my shopping, all my travel that I do, I get a rebate back from Priceline because I book my hotels, everything. The Travelocity, we have them all inside of here. Okay. Strategy 3. This is where we talked about income shifting. Once we've helped our people get debt free, we're creating business income.